It's up to political leaders, democratically elected, to solve political problems, and it's rightly so. What we, as central bankers, say is that it is of utmost importance to complete the monetary union by an economic leg, so to say. There is a worry, including in Germany, but which I can understand and share, that monetary policy remains the only game in town, and that by the next recession, monetary policy could be overburdened. If we have this worry, we should strengthen economic union. These are two sides of the same coin. How can we proceed in this direction? There are some pragmatic progresses which can be made. If I could mention at least two of them, what I call a financing union for investment and innovation, which is a broader capital markets union, using private resources we have in the Eurozone, savings of more than 350 billion each year in excess of investment. And a second progress would be a better coordination of economic policies, and including in the European stability mechanism, some kind of crisis prevention mechanism.
Would that also perhaps alleviate the concerns or the risk a little bit that once the ECB is taking the foot off the pedal, there could also be a renewed recognition of that there is sovereign risk?
We shouldn't forget about the need for national and structural reforms, and they are an absolute prerequisite to any progress at the European level. They are necessary, and as a matter of fact, they are underway and accelerating in France. I stress it as a fully independent central bankers. National reforms are necessary, but they are not sufficient. And this is one of my messages. We should stop opposing national reforms on one side and a strengthening of the Eurozone on the other side. The simple reality is that we need both. But now it's time to act, and I am a bit worried by the fact that, at least in recent months, the debate, including in the European Council and in the ECOFIN, has been stuck, if I may say, on very old cliches like opposing risk reduction and risk sharing, or focusing on EDIS, the so-called deposit guarantee scheme for banks. We can find new ideas. We have more pragmatic and consensual solutions to go along this strengthening of the economic union. But now, and we said it very powerfully in the Governing Council last week, now it's really time to take specific steps on these issues.
What would be these ideas which are easier to implement in your view?
Capital market union broadened in a financing union for investment and innovation, and there is consensus among all governments on this issue. So we should be serious about the technical agenda to foster the existing resources, private savings, towards the existing needs, be it digitalization, SME equities, or energy transition, for instance. Our growth in the long run in the Eurozone will depend on this investment and innovation. It will not depend in the long run on monetary policy. So it's highly time to invest more thanks to these private savings we have together.
Still watching? Perfect. Click here to watch another great video from CNBC International. Oh, and don't forget to subscribe. Thanks for watching.